Hello, hello, hello. Very good afternoon to all you wonderful traders, all you beautiful ladies, and you handsome gentlemen. Welcome to our daily live stream brought to you by DCFX Asia, and I am yours truly, Abe Layman, coming from the city of Solo, Central Java, Indonesia. Welcome, and today the topic of the day is the FOMC and the Fed funds rate. Well, last night the CPI, or Consumer Price Index, was issued. It was negative numbers, but the immediate effect was an immediate dive. Yet thereafter, it climbed back up. What's happening with the US dollar, you might ask? Well, it is a tricky thing at the moment because the big boys or the institutional traders are in the market and they are anticipating a lot of movements coming from the central banks. We have three central banks issuing rates this week. It'll be a busy week, especially today and tomorrow. For tonight, my time is about 1 a.m. Your time will be, those of you at GMT plus 8 will be at 2 a.m. in the morning, where Jerome Powell and his merry men, the Feds, will issue the statements or the minutes of meeting from the Federal Open Market Committee, and of course, the issuing of the Fed funds rate, which is the official interest rates of the US. Will that be affected by recent events like last week? We had a surge in unemployment claims, which rattled the US dollar index or the DXY. And yesterday's negative CPI numbers, even though is expected and is already priced in, the effect was almost immediate. Thereafter, an hour after that, it simply went the other way. So let's take a look at what's happening in the economic calendar. As usual, I suggest you to always take a look at the economic calendar at the start of your trading day. And ladies and gentlemen, please bear in mind, whatever we do here is simply to give you an analysis and give you ideas on what to do or how to trade. At the end of the day, the decision to plan your trade and trade your plan is up to you. Okie dokie. So, well, this is the economic calendar, and looking at yesterday's numbers. Hang on, today is Wednesday, right? Right. Yesterday's numbers was the CPI number that came out at 7:30 p.m. my time. That is during the New York opening, and you can see that it's a negative number, month-on-month CPI. The expected projected number was 0.2%. The actual number came out to be 0.1%. And then the CPI year-on-year, expected number is 4.1%. The actual number came out is 4.0%. So, and almost immediately, the dollar index went spiraling down. And for today, we have the producer price index. It's also related to the inflation rate. It's coming up at 7:30 p.m. Of course, the core PPI month on month, and also the PPI. Well, see, the U.S. economy is a dynamic economy, and it has got loads of financial houses, and these financial houses also have loads of analysts. All right, they have fundamental analysts, they have technical analysts, and they even have quantifiers. Quantifiers are basically mathematicians who works with algos to understand how the economy is doing and what to expect using the algos on what the economy is going to do. Like any other financial houses around the world, we have traders, right? So traders, there are also three groups of traders in the markets. They are the fundamental traders, they are the technical traders. Me, I'm one technical trader, but I would like to know the fundamental side of things. Why? because the fundamental side of things is the underlying factor that moves the market. The technical side is when I want to enter and leave the market. So overall picture is always the fundamentals. The immediate picture is always the technicals. Then the third group is the youngest group of all, and thanks to technology, they exist because they are basically mathematicians or quantifiers. For short, they are known as the quants. So these guys are experts in expert advisors. If you understand the MetaTrader 4 and 5, they have an algo set which is known as expert advisors, where you can key in your parameters and then the expert advisor or the machine or the robot will do the calculation and then will come out with whatever you desire for. Whether you want to measure the strength of a certain move or the target or where it's going and all that jazz, well, the quantifiers are there or are here to tell us what the market is doing based on the algos. So back to the US economy, and because we have loads of analysts in the market, they rely on a lot of factors. So they have a lot of measuring instruments. They have the PPI, the CPI, and whatever there is. Okay, but if you understand the law of economy, which is a supply and demand, if there's more supply, less demand, price will go up. Sorry, more supply, less demand, price come down. Less supply, more demand, then it'll go up. So it's either way. All right. So having said that, are we really in this scene where the US dollar is weakening? Looking at the fundamental side of things, I have this inclination to say that the dollar is weakening, and also because recent events shows that yes, the inflation rate has come down from a double digit last year. Now is the middle of the year, the first semester, they have gone to single digit and less than 5%, which is standing at 4.9%, with a running interest rate of 5.25%. Right. The what Federal Reserve had thought or had planned out middle of last year until the end of last year is that in order to tame the inflation, they should increase the interest rate, which they managed to do very well. Congratulations to Uncle Jay and his merry men, the Feds. They have reduced the inflation rate from 10.4% now to currently 4.9%, and increasing the interest rates from 3.25 currently to 5.25. But back then, when they first started this exercise, the ceiling that they want to go at is at 5.5%. It is known also as the terminal rate. And only last month, there was an issue with the current US administration, where the federal administration is going to run out of funds. Scary, right? Government got no money to spend, to pay for the law enforcement officers, to pay for the immigration officers, to pay for a lot of things. They were about to run out of money. That is why Janet Yellen, the Federal Treasury, or in other words, the Ministry of Finance, did say that unless the debt ceiling is adjusted higher, then the US, as the administration or the government, may not have money to pay the salaries of the officers who are working for them. It had happened before, back in 2011. Yes, some of the we all know as civil servants, those people working for the federal government had to stay home for 2 months because they're not going to get paid, because the federal government has no money to pay. So that has happened before, and I think now Congress, Federal Reserve, and the administration has come into an agreement because Joe Biden has did sign some documents based on the debt ceiling. I think it's about 34 trillion, raising up the ceiling. Well, those numbers are really not that important because what's important is how the market react. And again, let me reiterate this to all of you, great traders, wonderful traders. It's whenever you have a high impact data, try as much as possible not to be in the market because high impact data may go rocking and rolling without no reason, without reasons. Okay, so we don't want to be caught in the market with our pants down, which is not good. So my advice is whenever you have, when we are about to have, like tonight at 7:30 my time, 8:30 your time. So by 15 minutes before the data is released, I clear all my positions. Whether I'm losing or making money, I will clear all my positions. Then I'll come back 15 minutes or half an hour after the data is released. Only then the market will work according to the technical factors or the facts that are in the market. Okay, so what's going to happen tonight? Let's see what happened yesterday. And now, before we go to the technical side of things, I want to share with you some news that could be interesting. Okay, this is from Business NAB, which is an Australian publication. Markets today soft enough to skip. Okay, UPS data, sorry, US CPI data in line with expectations, meaning they expect the numbers of the inflation to be about there. Meaning the fiscal policies from the Federal Reserve has, by increasing the rates, have somehow softened the landing of the US economy. See, it was flying high, now it wants to come down, slow down, cool down. So the landing was soft as expected. So do we expect it to go rocking and rolling? As always, because there are speculators in the market, and speculators will always speculate because they are born to do that, and of course they have muscles, not these muscles but these muscles. All right, they have plenty of funds. They are trading by the billions, not millions. So they are the big boys, the market makers. They somehow will manage to move markets, right? So most probably the pricing, the inflation rate and the FOMC has already been priced in the market, meaning the traders, economists have anticipated what's going to happen later tonight, so they have already priced in into the market, meaning we will see more technical movements compared to fundamental side. Okay, so that is based on NAB from Australia. Next, we'll take a look at news Associated Press, and says that Associated Press says that Federal Reserve likely to skip a rate hike at pivotal meeting Wednesday, yet signal more to come. Okay, signal more to come. That is coming next month, and I believe the events on Thursday and yesterday, these two have affected the markets, but that I doubt will affect the FOMC meeting, which is tonight. See, the FOMC, they meet every week, Federal Open Market Committee. They meet every week. They assess the situation of the open market, and then they decide on the fiscal policies for the US, where it's going to go, because they are the central bank. So, yes, they might want to have more rate hike, maybe later, maybe next month or in August, where we're gonna have the summer season. But for tonight, I doubt if Jerome Powell might change his mind of surprisingly come up with a new rate hike of 25 basis points, which is most unlikely. So we expect things to be at status quo, meaning the Fed will stay uh, to the pause, meaning it will stop increasing the rate hike. It will give its reasons to capital and to the Congress and the rest of the world. Then let the world decide what they want to trade on. So it could be a no event, but as usual, any data or any news from central bank market can become a casino. It goes, then it goes, then, well, that is the fundamental side of things, and I think we have done enough for the fundamental side of things, meaning what Federal Reserve is doing is going to let the market decides. More, more likely is that the Fed has done their work. Okay, they have done the policies to the best of their ability based on the best knowledge and the best information that they have. So they want to see whether the market reaction is going as planned, because for sure the US economy has landed softly to a slowing down. So it's not an abrupt thing, and they somehow managed to steer the US economy from recession. The bad word, recession. No, the US has managed to steer away from the recession. Yes, they still have inflation. Yes, the growth is not that high yet, and so are the rest of the world. Only Germany is brave enough to admit, okay, we are in a technical recession. But Germany has got their own fiscal policies that can bring themselves up to a level of growth in a matter of time, which any other central banks would like to do. And it is not a big issue, and it is not the end of the world. It's just a cycle, all right? So you go to a recession and then you go to a slow growth, just like in the market, the trend. The trend has three phases. The first phase is the initiation phase, where it will start to grow a bit, and then they have the accumulation phase, where it start to grow a bit more and take a longer period, and then it will go to an excess phase, where the increment is substantially higher, but with a shorter time frame. After the excess phase, what it does is it took a dive, which is pretty normal. That's how economic cycle works. Don't believe me? Read on Charles Dow and Dow theory. It's all there. Google it. Dow theory. You will understand what I say. Okay? All right. Time to go to the technical side of things. Let's see how does the dollar index behave this week. Okay, here you go. This is the dollar index, and as usual, we always start to analyze from the daily chart. Okay, and looking at the daily chart, the chart is telling me that the bearish momentum is in the market. Why do I say that? You can see this is MA10. MA10, I call it the momentum line. When MA10 crosses the midband of 15 BB, that's the first stage of the bearish momentum. The next stage of the confirmation is when the MA10 crosses the 15 BB, 20 BB, sorry. There. The midbands. So when MA10 crosses the 15 midband, 15 BB midband, then crosses a 20 BB midband, that is bearish momentum. Now, you take a look at the trend ribbon. The trend ribbon was going south. It was a bearish trend. Then after that, it goes sideways. Why it goes sideways? Because the counter trend came into the picture in the month of May. American bulls were charging. The whole family of bulls, from baby bull, mama bull, papa bull, grandpa bull, maybe all in, pushed the market up, and it went from 101 all the way up to 104. Well, they missed the target. The target for mid-year, the first semester of 2023, the target for the dollar index is at 105, but only manages to hit 104.709, which happens, you see this number A3, this is the 50% level of last year's high low. All right, so it's only the 50% mark. They cannot go beyond that, and naturally, after you hitting the peak, when you read an overbought position, prices will come down. So it is retracing. And this current retracement has gone to about the 60% level of the month high low of last month's high low. It may want to go to as low as 102.779. My target for today, when the numbers are issued and the economists or the traders globally will have the same thinking that the dollar is weak, the dollar might go sliding deeper to a level of 102.779. That is based on the daily chart. Let's take a look at the H4 chart. Let me check. Oh, sorry, I'm blocking you. Okay, let's shift this. All right, now the H4 chart is telling us that the momentum is still bearish. As you can see, the momentum line crosses since last week around here. Right now, it has been it crossed again yesterday, the end of Monday or early Tuesday, and now the MA line is away from the 15 BB and the 20 BB. So the bearish momentum is in place. So we have baby bear, mama bear, papa bear in the market, and they want to slide. They want to dance. The dancing bears will want to go lower and lower. The first target will be here at 102.980, and the ultimate target is where we have the monthly channel plus the monthly Fibo and the weekly Fibo of -2 to be at 102.779, or it can be as low as 102.676, which is -A3. Well, -A3 is the 50% of one negative cycle down. Well, you can Google about Abe Layman to find out what -A3 really means. Okay, so it is looking weak. It is looking for a south side tour based on H4. Let's take a look at H1. Can the hourly chart tell us a different story, or is it going to be the same? Well, apparently there might be a pullback happening at 103.041. Why? Because yesterday's low was at that level. But yesterday's low was the issue of the CPI. It went down, and the following candle, the next hour, it went up, and it was going sideways, up and down until the end of the day. This morning, it opens at where it was closing. It tested high, but you can see the high of today is being resisted by a weekly channel and the top band of 20 BB. So this is the first indication that it is not strong. Okay, now looking at the momentum, the MA line crosses the 15 BB, and the following candle it crosses the 20 BB mid band, and now it is moving away from the mid bands, but it prices have touched the bottom band of 20 BB, which usually may want to stall the drop. It may want to go sideways based on H1 chart. Let's take a look at M15 for another clue. Okay, there you go. M15 is also telling us that the bears are still in the market, but the bears are not too sure where to continue because it is being resisted by the 20 bottom band, and also there was a low of yesterday at around 103153, so it might want to go sideways before it goes further down. But if you want to go in half an hour to reach this level, it has to drop about 129 points, and there's no data in the afternoon, so I suspect that it might want to go sideways, maybe gradually down. If the timing is right, it may take about three candles, one, two, three candles, which is about 45 minutes. So by 4:15, it may want to go there, or it might want to go sideways. Then it might want to pull back up to this level at 103, where we have the daily channel cross, and I expect this daily channel cross to coincide with at least the MA75. Then it becomes a tough resistance. Then when New York opens, it may shake a bit, then it might see a south side tour, meaning it's going down. All right, so that's the story with the dollar index. Technically, based on the daily chart, it is weak. Based on the H4 chart, it's also weak. Based on the H1 chart, it is taking a breather. And based on the 15 minutes chart, it's going sideways. So it needs some for it to move further. But I'm looking at a weak dollar for today. So it depends on the reaction of the traders on the Fed funds rate, which is, I think, has been priced in. There will not be, I doubt if there's any surprises, as most economists or most analysts are eyeing that the Feds are happy with what they have done, and they wouldn't want to shake the tree or create a a funny reaction. So it can be a boring thing, but well, let's see later tonight. Okay, excuse me. Now we're done with the dollar index. Now let's say hello to our friends. Jenny, hello, hello Jenny, welcome back. Good to have you. Oka, hi Oka, welcome back Oka. Good to have you. Where do you think DEX could go to? DEX was climbing when I was doing my work earlier today. So let's take a look at DEX. This is DAX. See, the funny thing is Germany is said to be in a technical recession, but DAX, which is the German stock market, has been climbing ever since. Okay, so looking at the trend ribbon based on the daily chart, it is bullish trend. Early this month or late last month, it tested it tried to go south, a pullback, because it has been climbing since early this year. Oh, DAX has been climbing since October 2022. Man, they are the bulls are very hardworking. The German bulls are very hardworking. So the bears came in only the on for 2 weeks in the middle of May. Then the bears came back, and the bulls, the bears were here. Then the bulls came back, and looks like the bulls are taking the ducks higher and higher. Why the bears came? Because last month DAX tested the high of last year, AT, which is 16,273. That was the high of last year. And usually it's good to pull, it's always pretty normal to pull back when you hit an overbought situation. And that's what DAX did the 2 weeks of May, the last 2 weeks of May. And for the first 2 weeks of June, it has recovered the full back and more. It is going to be more. All right. Now, currently, it is going to test the month of May's high, which is 16,322. And by the look of things, we can look at a strong bullish DAX testing up to 16,503. Why? Because there is the monthly Fibo plus a monthly channel and a yearly channel waiting to be tested. So, okay, I think DAX is bullish, and that doesn't mean you want to buy now. Wait, go to a smaller time frame. Yes, H4 tells us, yes, the bulls are here. The German bulls are very strong, and the German bulls might take a break soon. Meaning, they'll take a break for a while, they pull back a bit. H4, not so clear how much it will pull back. Let's take a look at H1. All right. So, H1 says that the pullback may hit to around 16,273 or 16,275. Yeah, about that. 16,273. That is the first support that it might want to test before it goes up to 16,405. Right? So, my level of support is the high of last year for DAX. See, once it broke the high of last year, it will not just continue further. It will try and pull back, because those guys who bought earlier may want to do some profit taking. Okay, so profit taking is about to take place maybe later tonight based on H1, because after going up for the past 3 hours, they are quite tired, I think. Let's take a look at M15. Man, they are taking a break, because the first indication of a pullback is a shooting star, which is here. But this shooting star is not like this hangman. This is the hangman with the body above the top band, and it was a trap, because after the hangman there was no confirmation and it went up. So as we speak, the current candle now is forming a shooting star, but it is still below the top band, so it's not significant, and it will take about 10 more minutes for this candle to close to confirm. But as you can see, there are multiple Fibos at this level, which is 16,335. There is the weekly and monthly Fibo at this level. Sorry, daily, weekly, monthly Fibo at that level. So it can be a scary thing, meaning it will be tough to break it's pretty normal for DAX to pull back. So if you have buy here, I suggest you take your profits and take a break. Let it come down again to about this level at 16273 before it can rebound again. Yes, it is bullish, but it's too late to chase the price. Not advisable because it is ready for a pullback because profit taking is going to take place in the next half hour. Okay? Well, that is that for you. Well, okay, I hope it is useful. And remember, the decision to trade is yours. My job is to tell you my views of the market, whether you buy or you sell. That decision is yours because you plan your trade, then you trade your plan. Okay, next. Who do we have? From Oka, Mr. Pia. Hey, Mr. Pia. Hello. Welcome back. I want to know how do you close your trade, like first half, then half of half. Oh, well, I'm sorry, my friend. I have not opened any positions because I I did not see any opportunities. By the time I saw the opportunities, I was too late. Let's take a look at gold. I was eyeing gold, but I missed this number, this level here, where we have a spin top below the bottom band, right? Why I want to enter buy here, because you look at the daily chart, it is above the, wait, am I blocking you? Oh, sorry. See, gold was supposed to be bullish yesterday, but we got spooked because the big boys wants gold price to go lower to MA 100 and also to the bottom band of 20 BB before they start buying gold. See, the anomaly is yesterday the dollar was dropping, gold was also dropping. This is an anomaly, meaning it's not normal, right? So we got spooked. And well, this morning, gold decided to, okay, enough of the bears, let's bring the bulls in. Will the golden bulls be strong enough for tonight to go through? Remember the bogeyman of gold, 1962.80? Will it break that? We'll find out. Hang on. So, if you're asking how I enter half and half, well, I'm quite conservative trader. I'm not that adventurous. I enter, although my capital is about 50K, now reduced to about 43K. I don't enter 2 lots, 3 lots. No, I enter one at a time. If it's good, then I add one more. Yeah, I'm can say I'm scared, but it's more like I respect the market and I don't want to be caught off guard. But if you want to know how I trade, this is gold, and looking at the M15 and the M30, M30 tried to go, sorry, M30 tried to go above the MA 100 but got stopped. Let's take a look at M1. Okay. And M1, I wouldn't want to enter the market even though the momentum says that the bears are back in town. Okay. So I might forego because I do not want to have a large SL level. But M5 is telling me that it has peaked, meaning there is a bullish engulfing, a bearish engulfing. Sorry. There is a bearish engulfing based on M5. Is it worth the risk? Now it's at 4:40 my time. I think yes. I'll sell. And how much risk am I willing to take? 193. Okay. and that I want to see that level. Is it above MA 125? No. See, my stop loss levels, I want to be away from the nearest resistance, so I'm willing to take $300 loss, that much. Okay, because there is a tendency for prices to shake you a bit and then test up to 125, MA 125, which is here, then it just pull back. Okay, this short trade may not last more than 2 hours. Okay, I don't expect it to last that long, because let's take a look at M15. Hang on, MA. Okay, now we have this level as a support and resistance. I want this to be a resistance, so I have to wait. This is based on M15. In 3 more minutes, it will confirm whether we are safe, or my position is safe or not. See, yes, it is still a bullish trend, but usually after breaking 125, it does not immediately goes up. It might want to come down. And based on M30, it is being pressed down by the trend ribbon, which is MA 100. And MA 100 is a usual reversal level or reversal point. So this current candle, I have to wait about 20 minutes. Oh, sorry. Wait about, 15 more minutes, 20 minutes to confirm. If it stays that way, I'm safe. If it's not, then I'm not safe. But I'm looking at a profit level, say around this, about $600. Okay, not too bad. 945. But currently, it is running slightly profitable. Not yet. Still floating loss. But let's take a look at 15. We got 2 more minutes to see if this candle does what it does. Right? So, and that's how I trade. That's how I view. That's how I analyze. But my suggestion is, it is just ideas, and please, you have to decide based on your plan. Right? I took my decisions goes quick because I understand the indicators that I use. So sometimes it fails, yes. That is why we have the stop loss. Most of the time it works, which is good. But so after we have done our open position, we have our stop loss levels, and then we have the target profit levels. Let the order do the work. Then I can analyze other market based on the request. Okay, Sir Mr. Go Walker, is it? Oh, Mr. PR. Okay, Go Walker. Hello. Hello, Go Walker. Welcome back. I want to know about why will this influence gold price? Well, my friend, whatever affects the dollar index will affect the price of gold. All right. So it may shake the market for a bit. It is now. It's pretty early before the FOMC and the PPI. PPI is coming up at 7 p.m. or 8 p.m. your time. Then you have the FOMC, which is later tonight, right? Midnight. So plenty hours to go. At least from now till 7 p.m., I'm trying to make do of the pullback of the gold, because based on the charts of the M30, it looks like it's about to do some reversal. M5 is supporting it. M15 is also supporting it. And based on that, I made my decision to short the market. It may not take that long. It may be only a small profit, but it's okay. Small profit is okay. Okay, right. Mr. Go Walker, I hope that's good. Smith JT, keep selling even though the US data is very bad. Ah, well, Mr. Smith JT, welcome back and keep selling even though the US data is very bad. Well, I have doubts, right? So it can be scary to just keep on selling. Yes, the US data is bad. You can sell yen, you can sell Swiss, but you don't sell euro, you don't sell pound sterling, you don't sell gold. It works the other way. Okay, so gold Walker is still holding by at 1942, TP at 1990, 10 lots. Great. Man, you are a big trader. I'm not a big trader. I small trader. One lot at a time. Because I don't have enough to go for 10 lots, my friend. You holding by at 1942 and you want to go at 19. Hang on, what? Your TP is 1990. Possible. Possible. If not today, tomorrow. Well, you're a brave man, my friend. I'm not. All right. So, next. From Mr. Go Walker, we have Lisaya. Hey, Lisaya. Welcome back. But on the chart, some are buying. Yes, yes, yes. You can always buy. See, it is a bullish reversal based on intraday and intra-week based on H4. This is the H4 chart. Let me enlarge this and let me shift this. See, gold has been ranging for the past 2 weeks sideways, right? And it has a high of around 1972 and then it has a low of around 1939. And for those of you who caught this candle and have your buys at around 40, 41, good for you. You are making money already. Good for you. But I am trying to do a pullback because I don't want to wait for it to pull back and not making money. So I'm trying to do a pullback. See, nature's law states that 3 step forward, 2 step backward. So I'm trying to bang on that 2 step. So I am relying mainly on the M30 chart and the M5 chart because the M5 candles tells me that it is overbought. Then the M30 chart where MA100 is here is also telling me that it's overbought and is about to do a reversal. Okay, I may be wrong. When I'm wrong, I will lose $300. If I'm right, I can expect to make more than that. So it is the risk factor that is in the market. Then we decide whether we want to take the risk or not. Okay, so I'm telling you, I'm willing to take the risk. If you're not willing to take the risk, then you shouldn't be trading. So for those of you who have bought, good for you. You are already having some profits. And you may want to liquidate some, then enter again when the pullback occur at around 1946 or 1947. I'm hoping, I'm thinking that, sorry, from what I see, there is a possibility that the price from the top band may come down to the bottom band before it starts to reverse to continue its bullish swing. So at the moment, I have some profit a bit, I think. Let's take a look. Yes, $3. Very small profit. Never mind, we'll wait. Oh, I'm not holding this for long. I hold my trades for about an hour, sometimes 2 hours, maybe 10 minutes. It depends. It depends. Right? So at the moment, when this M15 becomes a shooting star or an evening star, that will be nice. Then the pullback might bring down to 1944. Then we'll see what happens next. Okay, so that's how I read markets. That's how I analyze markets. Then, if you want to join me, I advise not to because if you don't understand what I'm doing, then you shouldn't be following me. You should do what you understand. If you understand the methods that I'm using, good for you. Then you can try. But if it doesn't work, then it doesn't work. Okay? So, And I never claim to be the best. I am not, but I'll do my best to give you the best, to give you the information that's useful. If it's not useful, then discard it. If it's useful, use it. Okay, so very slight profit, then it becomes negative again. So let the market dictates. All right. So next, who do we have? Rita Kid Roll again, guys. If we watch the 1 minute chart, it's clearly a buy time. Maybe. Let's take a look at the 1 minute chart. I hope you are referring to gold. Yes, it is buy because it has a support by the MA 125. Then there is the bullish reversal, which currently is being testing the midband. Will the bulls stay? Well, yes, it changes. You see, market dynamics change every minute. So it all depends, and timing is pretty important. And if you enter at the right timing, you usually get good results. If you enter the wrong timing, then it could be a substantial floating loss. Floating, yeah. If you're willing to hold, then it can convert to be profit. You can be profitable sometimes, but so Rita said it is bullish. Yes, M1. Okay. Thank you, Rita. Thanks for the advice. Next, who do we have? Smith JT, DXY, dollar index near support. Okay, let's take a look. Dollar index. Let's take a look at dollar index again. It says that it is near. Hang on. I got some issues with the Vimeo. Wait. Okay. Right. Dollar index near support. I'm not sure what you're referring to, sir, because my charts, the support is it's not there. It is has gone below the support. If you refer to the MA 75, it has gone below that. The next support will be the bottom band of 20 BB. Maybe it's your support which I can't see. So, well, that's what it is. Since the dollar index is still going sideways, but let's take a look at H1 went down, M15 still dropping bit by bit gradually, H4 okay, it's still there. Well, what I mean is it's still on the downside. Yes, possible. If you look at M5, yes, it has a support which is a monthly channel. It's still moving sideways. Well, it might pull back. So if the dollar index pull back, then gold might come down. Hopefully. Well, that's how it is. Maybe. Let's take a look at what the gold is doing again. Wait, before that, Gold Walker, sir, can you provide some signal? I want a clear trade buy or sell. Well, I just did an open buy, and then again, uh, it is part of my job to enter a market while we do live trade. And I was told to make sure that it is a profitable trade. At the moment, it's not profitable. It's okay, not a big issue. I have a floating loss of $58, and it's still moving sideways. There's no clear signal. Today now is about the midday of the sorry, this is the second hour of the European session. The M5 is still looking. I'm looking comfortable at M5 as long as the prices don't go to the midpoint, which is 152.20. If prices don't go up there, then I'm pretty comfortable. If it goes beyond that, then I might want to liquid and maybe take smaller losses and just wait for the next trade. Okay, so it is not. See, the thing is, when it comes to trading, Sure, it's good to have a trade signals. It's good to have third parties giving us ideas to trade. But I would prefer that each trader or people that are okay. Sorry, you have not attended my courses, so it's a different story. So you are my audience, and I give you some ideas of how I analyze the markets. So my preference is use the ideas of my analysis. Then you decide whether you want to buy or you want to sell, and based on the trading plan, your own trading plan, you need to have the knowledge of analysis. Technical analysis is the easiest analysis to do. Sometimes it can be tricky, yes. There is no perfect analyst. I know I'm not perfect. I can analyze based on the indicators that I use, that I understand, and I developed this system over the years because it has served me over the years. Sure, the younger generations, you have more sophisticated ways of doing things. You have my respect for that, but it doesn't work for me. It may work for you, then you use that. See, algos are useful. Expert advisors, useful if you know how to set it. And those things, those tools are here to help you to trade. We are here to do the same, to help you to trade. But you have to decide when you want to trade, what you want to trade, and how much risk you want to take. That's your decision. Okay? So just make it clear. Uh, Trading can be a fun thing, can be a sad thing, but take the sad things out, then make things simple. If it works with you, good, use it. If it doesn't work with you, throw it away. Don't use it. Find something else. Find something useful. It's always good to understand what you are trying to do. Once you understand that, may the trades or the falls be with you. For sure, you will have good results. Right? It takes time, yes. Nothing is instant unless you want instant noodle. Yes, that become instant. You want instant coffee, sure. Open the sachet, pour the contents, put in warm water, stir. That's it, instant. But trading, it's nothing instant. Just like in life, nothing instant, because trading and life has a law, which is nature's law. And nature's law states that you must start from the bottom, gradually you go up. So you learn the basics. When you master the basics, you go up one level, you learn the intermediate, then you go up one level to become the expert. And over time, you always polish your skills, just like martial arts. Before you become black belt in karate or judo, you have what, a yellow belt, and then and you have to go through all those belts before you reach black belt. Same thing in trading. It's the same thing. Now, my book says scalping the art of science. The science is the indicators, the math involved, right? The art is knowing when to enter the market, when to hold the market, and when to get out in the market. It is an art that you need to practice. The more you practice, the better you become. That is why we provide demo account. You can practice with your demo account. Then we have discussions like what we do every day. We analyze the markets. We can roughly tell you where the market wants to go, what the market wants to do. Then you decide whether you want to be part of the market and how much you want to risk. All that can be done on the demo. Once you feel comfortable, then you open an account with us with your funds. Then it can be fun. Right. So we have come to the end of the trade the program for today. Right, ladies and gentlemen, thank you for your time. Thank you for watching us. If you think we are useful, please spread the word around. Get your friends to join us. Give me more subscribers, and please give me some thumbs up. Come on, you my friend. So give me some thumbs up, yeah. Makes me at least look a bit good lah. All right. Then we've come to an end. So watch out later tonight, the FOMC and the Fed funds rate. Tomorrow we'll discuss about the ECB and the BOJ, which I think will be uh, not as exciting as the Americans' data, right? And whatever you do, ladies and gentlemen, don't worry, be happy, stay healthy, and please trade wisely. So, this is Abe Layman signing off. You have a pleasant evening. Bye bye, everyone. God bless. See ya.